All right, greetings once again, fellow traders. This is Michael Storm, also known as Robin Hood, and welcome to the Forex Market update. Today, I'm again late. It's February 3rd. Normally, I'm supposed to do this on a Wednesday, but today's Thursday. And if you look on screen, you're going to notice that we have up the dollar index on a monthly chart. I'm just going to warn you right now. I got a little puppy in the background here. He's kind of whining and crying little baby, so... you may hear some whining sounds or potentially a ball being thrown around. Nothing I can do about that other than to ignore him. So, all right, let's move on. So, first of all, I think everybody knows about correlations. I sure hope so. And how important it is to look at all charts. I believe all chart lives matter. Monthly chart lives matter. Weekly chart lives are important. Daily chart lives, of course, very important. And then we drop down. Always starting with monthly, weekly, daily, and dropping down our time frames to find entries. But correlations, also very important. So you'll see on screen the monthly dollar index, and me and my team were looking at this. He's whining in the background. I'll just let that happen. So we were looking at this for the last, good length of time. This is about 13 weeks up, and here you have, 13 months. Here you have about 9 months up. And the previous month, we were looking at the 618 level being hit from the, from the fib area. And then we were watching the topping tail, the daily doji, and then there was a beautiful bar where it dropped on the weekly and it dropped right to our support level. We'll test and see how good my microphone is. So I'll quickly drop down to a weekly so you can see it. Now, this is the area that we were short for a couple of months. Actually, this is about 2 months worth of time, and this was our target. Let me see what he needs. Hold on. Okay, so we're back. He just wanted his ball. Anyway, 2 months up here, we were shorting and shorting just about every
According
day.
to
Shorting the
Kyoto,
dollar.
Japan malls are sending gas to Europe amid Ukraine tensions.
Great. Hold on. I gotta find the news guy once again. Turn him off. Where is he located? 50,000 open tabs here. Okay. So these 2 months we were waiting for this to crash and burn, come down. Took about 3 days, fell a massive amount of pips, and when it hit the weekly support area that was our target, we went long. Now, granted, we didn't hold our longs long enough. It went like ballistic. And after all these days up, when we finally broke this top here, we were really thinking short. Big time. I mean, big time. We were short dollar. The US dollar, right? Not on the dollar index, but via long on the pound, long on New Zealand, long on Australia, etc. Long on the euro, right? So we were looking for this to rotate, roll over. I even put a tweet out on Twitter once in a while, saying, I've got dollars for sale, help yourself. But I'll sell as many as you want, and it just kept going up and up and up. And I'm shorting into this whole move, and then we finally got our fall that we were waiting for. And the first day it came down, hit the 382 fib. Let me just go and show you our target levels that we had. Pretty much all of these, 382, 50%, 618 level. Didn't even look at this over here, the 786, 886 magic fib box. Didn't even look at that as a target. I just wanted that mostly right down there. So when you look at the 4-hour chart, if I can get to it, you can see that we rotated very quickly. Hit targets, and just kept dropping like mad. Now, a few times we took it long. We went long on the dollar over here and got a small bounce on the day. It was very tiny. We went long over here, got a small bounce for, I think, 1 day, maybe a day and a half at the most. And then today the news came out and it got rocked. So I guess the moral of the story is to be able to look at charts and tell when something is just overdone. It's overcooked. Stochastics, one piece of the puzzle. They were very high. The breakout above here, breakout traders obviously just got killed. They got decimated. And so we anticipate by being long here, being short here, waiting for all of our targets to hit, which they did. And at this point, we're now long the dollar. So just as much as you don't want to buy tops, but rather short them, you don't want to short bottoms, but rather long them. Now, we may come down a bit more. We may hit the 886 fib, not sure. But on the charts, you should be able to see it is quite overdone. And we have a demand location over here. This is not supply, but demand. So that's one of the keys, is looking at the, the charts, all time frames, all correlations, and taking everything based on that. So in hindsight, this is another trade that we were all long when the euro fell in this little. I mean, it technically looks like ABCD, but if you measure it, it's not. Just make your measurements, and you can see that that's far more. So it has the appearance of like ABCD, but mathematically it is not correct. Anyway, down here where the whole world was so bearish of euro and the stochastics were buried, we were long and looking for great moves up. So we got what we wanted. That's helping us to get our, well, I think now my average is currently, it's either 996 or maybe it was 997 pips per day. My pip counter thingamajig is finally coming up, and I anticipate another day or two I should hopefully be over the 1,000 pips a day on average, but it takes time for that thing to work its way there. So the other issue is that we don't want to, like if you look at this, we can see massive up move, just incredible pushes, 4 gigantic pushes. You're so far away from anything. It just doesn't make a whole lot of sense up here. So currently we're short and willing to take in more. I know some people are like, oh, where's my entry? Where's my stop? Where's my target? Well, I kind of gave up on all that after 22 years of trading. The answer is really, I don't know. I don't know where your entry is. I know where mine is. I don't know where your stop is. I don't have one. Where's the target? Down. In my humble opinion, down hard. Now, how long will that take? I don't know. I just don't. I'm looking over here at the 4 hour and I see this racing up, the guppies racing up. I've got grandma and grandpa over here, the 100 and the 200 right in this area. It's going to be really hard to get through. So even though we've closed, if you look at the daily, we have closed at the high and we could still make a run over here. It's quite obvious that, that could happen, and I'm okay with that. So if that occurs, I'd be shorting more euro up here, adding into my position, trying to get a better price on my core, and then anticipating a nice fall back down. So looking at the 4 hour, I can see that critical wick. I see the dual moving averages right there. The guppy is going to be racing up to that point. So right now, I don't really think from where we're trading at here, not really looking for more than 100 or maybe 120. Currencies have the power to shock you. They can always go higher than you think. And they can always go lower than you think. I'm really only looking for this. But, what if it crashes much lower and we're down here next week, several days away? We could be all the way down here into the 112s for all I know. So correlations are a mighty good thing to look at, in my opinion. And the other thing that we really like is some of these dollar crosses, like US dollar MXN, for instance. As you know, I think on the last video we had I'm pretty sure we chatted about it. We were long all in here and targeting this level. We hit it, it went higher without me. Still looking for this eventually, someday. I don't quite know when, but eventually up there. like 8,000. I believe it'll happen, but you know, that could be a month, that could be 2 months, who knows. So I do like occasionally buying this, especially when the dollar is down as hard as you see right now, and you look at your various time frames. You know, my humble opinion is I like to buy the dips when I get these killer moves of like 1,261 pips. I tend to bail out. If I see any stalling action up here, I always look left. You know, if I get long down here and I rock up here in a whole day, and you know, on a 1,261 pip move, if I've got 900 pips or 1,000 pips, I see a formation, let's say a 15-minute sell or whatever chart happens to float your boat. If it stalls and puts in a sell bar, I'm gone, because I don't want to see my trade just spit all back again. You know, be long here and yay, I'm up 1,000 pips, and then I've got nothing. Yay, I'm up you know, another 1,600 pips, and you know, half of it goes away. Yay, I'm up 1,700 pips over here, and then watch it all disappear. That's not fun. So I'm not into that. I like to reload my trades. I think reloading, recycling, very good for your financial health, recycling. Now, one of the other trades that we had taken in our room many days ago is we had noticed all of these wicks here, and we really liked this NOK short. We took it short, and all the days down, I think I was out on this day, so I missed this part. Right here we took something like 2,500-ish pips. And of course, every trade book that's ever written will tell you, you know, you're never going to capture the top, you're never going to capture the bottom, you just want to take a big piece of meat out of the middle. So even though we did not short the very top, and even though we did not get out here at the very bottom, we did take a really nice piece of meat out of the middle. And at this point, when I look at the stochastics, I look at the location, analyzing, you know, the US dollar index and the euro, and looking at all dollar crosses, right? 786, 886 fib, 200 right underneath, stochastics buried. I'm just not interested at this point in being short, because I look left and I see the demand. And so at this point, I'm lightly long. Now, some of you traders might know about the harmonics. Sometimes they work, and sometimes they don't. I guess the powers that be, I guess the pros that, you know, supposedly talk about harmonics, self-proclaimed pros, I don't know, whatever. They've run their statistics, and they say that this works about 67% of the time. And supposedly on, you know, bats and crabs, just because it has a longer leg, you know, this is the A to B right here, B to C, C to D, right? Wait a minute, I have that wrong. X to A, my God. X to A to B, B to C, C to D. What the heck? I'll get with the program. It's been a long day. I've been trading for 12 hours. 12 hours right now, so it's a little late here. Anyway, the X to A leg on the bats and the crabs is just usually so long. I don't think this is one. It's probably a Gartley or a butterfly. Who cares about the name? That's unimportant, really. But if you've got this massive leg, the last leg is really long, supposedly they work about 75% of the time, I guess. And those are fairly good statistics, I suppose. Usually the safest target is the B target, but there are times you get things in the way. And when things get in the way, I don't like shooting for that target because there's stuff in the way. And can you see anything in the way right now? I've got this spot right here. It tried to be support for quite a while, and it failed right there. And it came back up and kissed the broken support. This tried to be support a few times, and then it became resistance, and it crashed. So why would I want to shoot from where I'm at right now and shoot all the way for B, which is like 1,467 pips when I've got grandma is in the way, grandpa is in the way, and also there's the guppy wave. So, that's really hard. It's really hard to get through. So I don't think at the very first crack that we're going to make it up there. I mean, we might, now that I've said it, we probably, that we're not going to make it there. Probably will, just because I've said we're not going to. But I like this target up here. Just 1,000 pips, 1,200. I don't need to be shooting for almost 1,500. I don't have to do that. So as we look through the time frames, right, the daily, the 4 hour, the 1 hour, the 1 hour piercing bar, everything seems to, be in alignment. And, next thing is, which one are you going to choose? I mean, you don't have to do them all. It's basically the same trade. It's betting on the dollar popping. So I don't have to double up and triple up and quadruple up with all my stuff. I can pick the one that looks the best. For me, I think NOK looks pretty darn good. I also like the SEK, and the reason is, again, we were short. And like Jesse Livermore would say, if you're short and, you've got a target and it crashes and burns and it hits your target and then you decide you're going to get out, once you're out, well, if it's no longer a short, I mean, maybe it's a long. So, I was only targeting from up here and I was targeting to revert to this trend line. So we took our trade short, and I got out, not today, I got out yesterday. There was 2,000 something pip. I think it was 2,500 is where I exited. It went 3, popped a little more and dropped more. And now when I look here and I look here, run my fibs, I just don't like it short side anymore. I don't see any reason to be short. It was a great short here. With all these pushes, push 1, push 2, push 3, push 4, and so far away from the guppy, I'm thinking long. So we'll admit to you, I got a couple of tiny pieces long. They're very small. And similarly on MXN and NOK, and I think on this one, SAR, which is another of our favorites. Pretty sure I have not engaged. I don't think I'm long this one because it just doesn't look as good. So anyway, correlation lives matter, and I hope this helped you. I'll look at one more real quick because I see I'm doing well on my time. I'm not overboard. Okay, this is another trade that we were short up here. Now the reason we were short is because we had blown through that high. And then we look at the critical wick over here. We had blown through that high. And I know that would stop a lot of traders out. Everybody who was short down here in the bottoms. Why do people short the bottoms? God only knows, because I've never been able to figure it out. I don't know. It wasn't my fault. I didn't make them do it. I was long. Okay. Here I was long, here I was long, and here I was long, and all my roomies will absolutely attest to that fact. It's a fact, Jack. I was long over here, and I was definitely long in here, and I was long over here too. And all these pops were fantastic. But being an equal opportunity employer, not everything is always a bull. There's sometimes things are a bear. And in my opinion, that looks like a pretty good bear to me. Break all the stop losses, stop everybody out, look far left and see all the supply, right? That's not demand, that is supply. See the fibs, the 786, the 886 fib, SHI channel, topping tail, topping tail, topping tail. I mean, man, it just looked good to me. So it's always a little scary, when you're trying to bring yourself to do the right thing at the right time, because a lot of traders are like, hey, I don't know. Welcome to the club. You don't know. I don't know. Nobody knows. It's just managing your risk. And if you're trading small, then you're not going to worry about it too bad. Like our great ultra granddaddy trader of all time taught us, we know nothing for sure, and we don't have to. We just have to have a plan. So getting short up here might have been scary at the time because you're like, oh, I'm uncertain. Is it going to go higher? I don't know. You should be so lucky. That's the way I look at it. How many bullets did I even fire up here? I think at my highest point, I might have had 7 or 8 bullets potentially fired short, 12 more in reserve. Never got anywhere near it, which I feel is safe. And as we crashed, I'm scaling out. We crashed, I'm scaling out. We crashed more, scaling out. I will admit to you that I was long down in here. Not today, but yesterday. I was long right in here. Woke up this morning pretty early, saw it up nice. It was about from the absolute bottom to the absolute top. I think we were near 60 pips. Is that right? 58. So, did I make 58 pips? No, of course not, because I didn't go long right there, and I didn't exit right there. So I did not make 58 pips. But my small couple of longs I had, maybe 2 or 3 of them, they were paid something on the way up, and I got out this morning. I think it was right here. And actually, now that we're right back again, and we look at the euro, and this is the inverse, right? It still looks pretty good. So I still like it where we're located. Remember to look at the critical wicks. Might be possibly doing too much teaching here. I don't know. My team knows about all this stuff, but I'm not sure if you guys do. But look at the wick. Think for a minute. Hello, I'm resistance. Hello, I am resistance. How do we know? Prices went down. Hi, I'm resistance, right? Prices went down. 4th time, I'm resistance. Bam, prices went down. I mean, there's no lie. 1, 2, 3, 4. That's resistance. Right here, boom. You are not resistance anymore. It went up. And here, a retest. So resistance and support can be a slightly elastic, stretchy price point. It's not a hard and a concrete number. See it? Resistive, 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 supportive. And isn't support supposed to be retested? So when we were short up here, this was our ultimate target where we got long. And even now, I still think it looks okay. So just because I'm out of the trade, right, it doesn't mean the trade is over. Not in my humble opinion, right? I may not be long now, but I like it. So what I'm doing is, of course, dropping into the lower time frames. And I need to see some crashes so that I can buy. That was a beautiful crash right there. And that was an awesome pop, whereby we got out. Nice retracement crash, this 15-minute chart. So I always drop into the 1 minute, 5 minute, etc. and just do the best I can. Scoop up a little bit long here, scoop up a little long here. If it crashes back here or anywhere down here, would I stop out? God, no. Somebody would, okay? So from where prices are right now, somebody has a desire to stop out here. Why do they want to do it? I don't know. I really don't. I don't know why they want to, but it's their game. So if they go long now and they feel like stopping out here for 26 pips or down here for maybe 31 pip loss, more power to them. Let them do it. It's fine with me. So I would be interested in getting long down here if it drops more. And then, of course, mixing with patience and time, because time heals all the wounds, right? And the stair-stepping effect, of course, on the 1 hour, we've got grandma and grandpa going to get married again, renewing their wedding vows. It will be difficult to get through this number, but eventually we should be able to break it. That's 30 whatever. If I'm lucky enough to see this kind of fall, get more. Add that together, and you're talking 60 something, right? How long before you ever go back and hit this again? 77. How long before you ever go back here and hit this again for 100? I don't know. But do I really care? I don't feel like I need to know the exact number and the exact time that it takes to get into this area. But one of these days, it should land up here. So from where we're trading at now, we've got really good potentials for 30, 50, 75 pips higher. I'm just a dip collector. That's my job. Watch it get smashed so I can buy. Watch it rise. You know, you have to mix with that super duper magic high-powered ingredient, time. You know, you mix it with patience, and time. Eventually up here, I'll be clicking out. I'll be clicking out while others, for whatever reason that I don't know or understand, they will be wanting to buy it up here. They'll be chasing a trade, and that's okay with me. They can have my trade that I bought low. I will dish it out up here. It's just the way I feel about it. I don't know about you, but I hope that's helpful. Make sure you always look at your correlations. These are my lovers. This is my harem right here. These are my bread and butter, right? We are the pip masters, and these are the slaves, basically, that we short and we buy depending upon where they're at, what they're going to do. So use your correlations, use your dollar index, and may all your trades be profitable this week. And if you would just trade small, then maybe you won't freak out so much when you're down 20 or 30 pips, okay? If you're freaking out over that, then you're probably trading too big. That's just my opinion. So a lot of the people in my room have finally come around. I mean, some of them have taken 6 months, and some of them have taken a year, but eventually they come around and they say, wow, I finally see it. And, you know, time would fail me to show you those discussions. I don't sit there and grab every screenshot of those discussions that we have in our trade room, in the chat room, but it's there. And they're like, finally I see it. Finally I get it. And I'm trading your way. And oh my God, my days are great. And everybody's pretty happy. You know, if you make 1,000 pips a day or so, I think you're pretty happy. You know, some people like to count it in pips, and some people like to count it in percentages. Really, it can be anywhere from 1% on a boring day, maybe 2% on a pretty nice day, and occasionally 3% on a great day. Boy, you annualize that. Oof. You never have to work again. I mean, it'll keep the job away. Totally. So if you're looking at trading like a drudgery, then perhaps you just want to quit and give up and find something that you love to do. But if you're looking at trading with a passion, then is it really work? I mean, in my opinion, it's not work. Like the song says, I don't want to work. I just want to bang on the drums all day. Now I got to say, I don't want to work. I just want to bang on my keyboards all day. That's what I do. And 5 hours a day, 1,000 pips a day, my work is like play. So I don't know. That's the way I feel about it. But if this video was helpful to you in any way, if you learned anything or something like that, please give us a like, a thumbs up. It would help the YouTube algorithm, and it would help us out. We'd appreciate it very much. And share with your friends or post it on Twitter or whatever if you think it'll help another trader who's struggling. And if you want to join us, we welcome you, but please only if you've got the time to learn. If you don't have the time, don't do it. I know that sounds horrible, but yeah, if you don't have the time, just don't do it. But if you do have the time and you're like tired of the job, the journey of boredom, if you're tired of that journey of boredom and you'd rather work in quotation marks 5 hours a day, 6 hours a day trading, we welcome you, and we'll teach you good and hard. You'll get it. It might take a while, might take a few months, but you'll eventually get it. Okay, have a great week, and see you next week, and we'll try and pick another subject maybe more interesting than this one. All right, Have a great day. May all your trades be good. Bye for now.